Good afternoon, everyone, and welcome to TBR's webinar, IT Services Revenue Growth is Accelerating Gradually, but is it Sustainable? I'm Allison Crawford, and I'm hosting today's webinar. IT Services Revenue Growth, the 30 vendors covered in TBR's IT Services Vendor Benchmark, remained in the low single digits in 3Q14. TBR expects revenue growth to accelerate in 4Q14. However, IT services will continue to expand in the low single digits in the next few quarters. Vendors are using organic investments, partnerships, and acquisitions to differentiate, but commoditization of traditional IT services, businesses' cloud adoption, and smaller deal sizes, pricing pressures, and cautious client spend on transformational projects hinder revenue growth. Over the course of the webinar, we'll cover what's driving these trends and how should you position for success in this climate. But before I pass this over to the analysts, there are a few housekeeping items I'd like to cover with you. First, we will be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. We'll address them at the end of the webinar, or you can reach out directly to any one of us to set up a private conversation. Third, we'll send up the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. We'll share all these social media links to begin at the end of our presentation. Now let me introduce you to the team presenting today. The team is led by Patrick Heffernan, Practice Manager in TBR's Professional Services practice. Patrick directs the practice's syndicated portfolio and cultivates and manages projects on topics ranging from management consulting to emerging technologies, including digital marketing. Patrick's responsibilities tap his expertise in competitive intelligence, strategy, and global political economic analysis. Ramunas Svarcas, a principal analyst in TBR's Professional Services practice. Since joining TBR, Ramunas has been involved in formulating and implementing custom research projects, acting as an engagement manager for key TBR clients, and assisting in the launch of various IT services benchmarks, including cloud and business intelligence. He brings more than 40 years of experience in technology analysis, business marketing research, and forecasting. Elitsa Bakalova provides research, strategic assessments, evaluations of corporate performance, revenue, cost and profitability modeling, and overall trend and market analysis of the IT consulting and outsourcing industries. She primarily focuses on European and multinational IT services vendors and is the lead author of the IT Services Benchmark. Finally, let me introduce McLaughlin, a research analyst covering India-centric vendors and multinational vendors across IT services segments, geographies and industries, and emerging technology trends such as cloud, mobility, big data, and analytics. Amy is closely involved in the development of the IT Services Benchmark. And with that introduction, let me hand this over to Patrick.
Excellent, Allison. Thank you very much, and welcome everybody to this afternoon's webinar. I want to start at the front by saying for folks that are new to TBR, new to this particular benchmark that we're going to cover, just a reminder that TBR takes a vendor-specific and business lens approach to looking at the IT services market and actually looking at professional services and technology as a whole. What that means is that we start with each vendor individually. We build up our understanding of their strategies, their financial performance, what they're doing right, what they're doing wrong. When we understand a company in depth, then we compare them across the other companies, and that's how we build these benchmarks. All of it put through the lens of a business model, understanding what their business model is and how they're performing with that business model relative to their peers. So typically, benchmarks are used as kind of a launch pad for deeper dives, consulting-specific, or rather consulting opportunities to look deeper at specific elements of a different vendor or a different vendor set. So that gives you the understanding of how we approach benchmarks. And this is what we're going to cover today. It's an exhaustive benchmark. It comes out quarterly, but what we want to do today is just hit the highlights of some of the performance metrics that we track across all the vendors. We're going to focus, as we have this quarter in our analysis, on alliances, acquisitions, and analytics. And then at the end, as a way of giving sort of a case study of what's happening across the IT services market as a whole, we're going to highlight a couple of particular vendors and hear details about their strengths, their opportunities, the initiatives that we're taking. So with that, I'll hand it over to Ramunas to start us off.
Thank you, Patrick. As it was already introduced at the very beginning, we're definitely seeing that the IT services market is not growing as fast as it has in the past. The 30 vendors that we've looked at in the benchmark really are showing growth that's not as nearly at the same range as it was back in 2011 and 2010. And there's a number of reasons for all this happening. We know that, the cloud came on the scene back as early as 2009. There's a huge interest in that portion of the market, a lot of uncertainty. We were coming out of, a major recession for all intents and purposes on a global scale. People were rebuilding their infrastructure, trying to make decisions around cloud, and many line of business managers were buying cloud on their own. And all that really generated a lot of IT services revenue growth. As cloud has evolved and has become more understood, coupled with a lot of uncertainty in the marketplace, we've seen that really revenues have contracted from an IT services perspective in terms of actual revenue growth. The green line here on the chart actually represents the average trailing 12-month revenue growth curve for the 30 firms we cover in the benchmark. As you can see, the revenues have continued for the firms in total to expand, but that growth has really tapered off. What we believe is happening right now is that, we've kind of hit the bottom. Everybody's figured out or has touched cloud in some way, shape, or form. Run some test cases, done some little examination, and now comes the hard part, deciding what you're going to move, how you're going to rebuild your new infrastructure. We've got a bunch of emerging technologies evolving in the marketplace. Cloud certainly is one of the growth areas within IT services, and it's growing at over double-digit rates, but it's still a very small portion. IBM just several weeks ago announced their results, and almost a $100 billion company, and yet cloud only was about $7 billion in terms of revenues, less than 10%. And that was true across all our benchmark firms that we have here. And as we look at the cloud market, we know that it's still in its infancy. There are a couple other areas of high growth. BI and analytics certainly is one of them. And we'll be examining some of the other areas in upcoming benchmarks as well. But all intents and purposes, IT services revenue growth, we do not expect is going to pick up too dramatically over the next year. And there's a number of reasons why this is happening.
So right after I told you that we take a vendor-specific look, I'm going to jump up to about 10,000 feet here and explain that while we do look at each vendor individually, we also understand that there's a macroeconomic picture that matters as well, especially as all the things that Ramunas just talked about with respect to the commoditization brought in by cloud, with the impact of different emerging technologies on IT organizations essentially to do more with less. And as cloud, as Ramunas mentioned, eats into that traditional IT revenue. So you can see, I'm not going to read this whole thing, everybody can read it themselves, but you can see what the impacts are. And again, this is sort of taking that 10,000-foot view, but we do want to put that wrapper around all the things that we're going to talk about. When we go down into the specific lines of service lines, when we go into the specific companies, it's with the understanding that this is what's happening at the top of the market, or this is the big picture. And the other 10,000-foot view here, this slide here with hybrid cloud, cybersecurity, outcome-based models, and Internet of Things. I think it's realistic to say that we are probably really only into about the third ring here. Yes, Internet of Things is up and coming. We've recently published some excellent pieces from our devices and telecoms folks on what Internet of Things is going to mean in their space. And cybersecurity has certainly been around for a while. It's certainly evolving. Hybrid cloud, again, as Ramunas has been around even longer. All of this is sort of constantly having an impact, as you can see below, on IT services vendors' business models. And it's constantly having an impact on what clients see and what clients want. There's not a CIO out there who's not already thought about what does Internet of Things mean to me. It doesn't mean everybody's out there buying services around those things, and not everybody's buying services around outcome-based models, but this is the kind of thinking that's happening. And so as we understand each of the vendors, what we're trying to understand as well is not only how are they impacted by the macro economic trends, how are they impacted by the macro effects of cloud and commoditization, but also how are they impacted by the things, emerging technologies like analytics, like Internet of Things, that are forcing their customers to think about things in a different way. So I'm going to hand it over now to Elitsa to walk through a couple of the different service lines and some of the highlights we're seeing there. Elitsa?
Thank you, Patrick. So on this slide 9, we look at the service lines that we cover in the benchmark. Starting with BPO, BPO remained nearly unchanged when we compare with 3Q13, and was the fastest growing service line during the quarter. BPO benefited from a combination of horizontal and industry-specific services and integration of analytics to back-office outsourcing that helped the vendors generate the necessary business outcomes for clients. Applications outsourcing, which decelerated in terms of growth when you compare it to 3Q13, but not as much as ITO, for example, is the second service line in our benchmark. Legacy modernization, I think, in this service line and the move of applications to cloud is slightly slower in applications outsourcing when compared to ITO adoption, ITO cloud adoption. So growth in AO is holding relatively steady, and it's not as much affected by cloud. In this service line, vendors combine industry capabilities with geographic reach and internal IP and tools to maximize revenue and achieve the growth that we saw in 3Q14. Consulting and SI, our largest line in terms of revenue size, maintained a steady growth over the past 8 quarters in the 1.5 to 3%, and the 2% growth falls within that range in 3Q14. And it's one of the steadiest service lines out of the 4 that we've seen in the past 8 quarters. The service line is positively affected by expansion of consulting and SI capabilities around cloud, big data and analytics, mobility, social, and security. Vendors also develop their industry expertise, which positively affects consulting and SI. Vendors expand their onshore resources to be near clients and provide the consultative support and drive consulting-led opportunities. And last but not least item is that strategy consulting and overall management consulting is growing faster than IT services revenue growth. And in strategy consulting, vendors have invested over the past several quarters to build their capabilities and help clients address macroeconomic, regulatory requirements, and emerging technology uncertainties. So driving growth in the management consulting segment is positively affecting consulting and SI service line overall. On the ITO side, the only service line that declined in 3Q14, ITO is moving to a new model, which is causing the deceleration in growth. This model is cloud, so effectively ITO is shifting from a hosted environment in which the client buys the equipment and the vendor manages it. So now with cloud, the environment, the model is changing from for the client to rent from the vendor. So effectively, the adoption of cloud erodes the traditional ITO revenue model. And we see the hardware-centric vendors being impacted the most from this transition. Now let's move to slide 10, where we have the geographic performance. EMEA was the fastest growing geography in 3Q14. It's notable that EMEA turned to growth in 3Q13, so effectively last year at this time, and has expanded its growth rate for the past 5 quarters to reach 4%, and the highest growth in 3Q14. EMEA is positively affected by pent-up demand, which results from improving economic climate in Europe. Clients' big focus on cost savings is also driving interest in outsourcing, and vendors that have established nearshore, offshore, and onshore delivery capabilities are benefiting from this demand. There's growing interest for social media analytics and cloud and security solutions in Europe. Also, vendors are becoming more relevant to clients by using industry-specific go-to-market and industry-specific solutions to address client needs. And one example is IBM Global Business Services, which changed its operations in Europe recently from a country-specific focus to an industry-specific focus. So now, by approaching the European market by industry, IBM is able to address clients' needs that are based on the segment that they operate, and adds additional industry point of view, assets and solutions, as well as experience from operating in industry across Europe to solve client needs. There's still countries in Europe that are experiencing challenges in terms of growth, and vendors still have challenges to approach regional and country-specific needs, which generates more work for vendors and hinders expansion. So growth in EMEA still remains in the low single digits. On slide 11, we have the vendor snapshot. So the 30 vendors that we have in the IT services benchmark, and we are positioning them against each other based on revenue growth year to year, operating margin, and the size of their revenue on a trailing 12-month basis, which is represented by the bubble on the graph. I want to focus on the India-centric firms here. They occupy the top right quadrant of the graph, and they are above the average growth and rank above the average operating margin for the 30 vendors. India-centric firms lead due to their improved regional operations and transition to solutions-led business models. So, for example, Cognizant, which is the leader of the group, builds out business consulting and transformation solutions, taking aim at multinational IT vendors like Accenture and IBM through an expanded onshore delivery and bundled solutions. TCS, the second in terms of growth for the India firms, benefits from IP and embedded analytics investments. Now, I'd like to hand it over to Ramunas, and he will go over the quarterly focus of the benchmark.
Anything Thank you, Elitsa. So we're not really seeing anything dramatically new in the vendor space in terms of what they're doing. And in many cases, it's much more of the same. But, alliances, acquisitions, and now the area of analytics are really becoming very important for vendors to compete in the marketplace. We've seen a lot of activity from the alliance standpoint over the last 2 years, and that is not curtailing in any way, shape, or form. The vendors are all aligning, especially the hardware-centric vendors are aligning with the software players. The software players are aligning with the systems integrators, and everybody wants to align with everybody else. The key element behind all this is that they all want to be able to provide an end-to-end solution. Cloud itself and the cloud market really is all about executing workloads, and workloads are effectively applications, and that's why it's so important to align with software vendors. The alliances, stretch, however, not just from, well, primarily they stretch across the board, but the ISVs and the software vendors are the ones that are being aligned with the most. There are small alliances, EMC with CloudLink in the last quarter, Fujitsu with Red Hat, and TCS with Cloudera. Not to mention here, just to note, two of these vendors that I've highlighted are really the Indian-based vendors. They recognize that through alliances and or understanding what those software vendors are doing certainly enables them to continue their core expertise in applications outsourcing and helping basically modernize applications environments for clients. A couple other vendors that have formed alliances over the last quarter, specifically IBM with SAP, and SAP though being aligned with, alliances are being formed with virtually everyone. And then Infosys actually created and improved their alliance with Microsoft. From our perspective, the real key alliances of the future are going to be the SAP and Microsoft alliances. SAP, especially with the SAP HANA and the recent announcement of the new ERP software stack that they've developed, and in-memory processing is going to be the route for enterprise clients to really, accelerate how they analyze their business and or drive results from that analysis. If you're not working with SAP and HANA, you're going to be left out in the cold on the enterprise side of the equation. Microsoft, their Azure stack, and their Office stack certainly, touches on the enterprise side and also provides an entry into the mid-market side of the equation. That's why Infosys moved in that direction, certainly looking at maybe not competing directly head-on with the large multinational IT infrastructure players, but really trying to find their own niche in the marketplace. So alliances continue to be driven forwards and they continue to expand. And our alliance tables and our benchmark continue to get bigger and bigger and bigger.
But all right, but one of the changes really in the last half year or so has been using alliances to get into the small and medium enterprise space more than in the past. Is that right?
First, the firms that are focused in that area.
Right.
I mean, that's the real key. You've got to be focused. You create the alliances, you really are starting to pass that alliance expertise and knowledge on to many times your channel partners to be a leverage from that perspective and then pushed into the SMB space.
Because it seems, I mean, sometimes it feels like everybody is in an alliance with everybody, but the pattern that we're seeing now is more this selectively filling out into an area where you're trying to go rather than in order to get to that end-to-end, be end-to-end with everybody. Right?
Exactly, exactly. I mean, one of the things that is challenging all the IT services vendors is trying to find their market niche. And there's all kinds of market niches. I mean, certainly attacking just the enterprise space versus the mid-market versus the SMB is one approach. Others is looking at it from an industry vertical standpoint. You have a strong industry vertical practice in one or another industry vertical. You can align with an ISV that has a strong software stack that works well in that industry vertical. So it just, everybody's trying to find a niche, and that's really the key.
And that's where acquisitions come into, right?
And exactly. So looking at acquisitions, I mean, again, we're having a lot of different acquisitions occurring. Many firms are acquiring small consultancies, trying Accenture, for instance, with their Hydrack, acquisition of Hydrack Consultancy, really in a niche, specifically addressing the energy sector. On the other hand of the equation, the real key acquisitions, while everybody's trying to acquire smaller consultancies that build their consulting capabilities because they see it as a lead-in to the emerging technologies, there have been a couple of major ones over the last quarter and even in the last month. Cognizant acquired Trizetto. That was a major acquisition, and the reason for them moving that direction, really to become the end-to-end provider in the healthcare field. They have the IT infrastructure portion of the equation already handled. They added the whole capability of really providing the outsourcing services with staff and providing the end-to-end service for their healthcare clients. Another major acquisition, or should I say divestiture for one firm and acquisition for another, was Xerox. Basically getting out of the IT outsourcing business. An area that we've observed through our company coverage has been always a kind of a weak area for Xerox, but by unloading it to Atos, who has historically been trying to break out of its mold of being primarily a European firm, it provides an entry point into the U.S. market. So it's a major acquisition. It reduces an area for Xerox that they were not very strong in, but certainly expands the scale of what Atos can do on a global scale. So, and this is an area that basically the trend. It's really people through acquisitions trying to build scale, trying to cover all the holes in the marketplace that they have, and or it's figuring out what's the next key market area that they're going to be moving into.
So we'll go to the last highlight from this quarter's report. See if I can pull it up. And that's analytics. What's interesting for us here, we have a separate benchmark, and you can read here the sort of the very high level points on analytics. And I don't think anyone would be surprised at the developments in IT services around analytics. So I want to dive into some of what we found in our research. We have a business intelligence and analytics services benchmark, and one of the things that we've done in that benchmark is group some of these vendors that are also in the IT services benchmark together, and we can see some patterns in the way that these companies are responding to what's happening in the market for analytics. For example, a lot of the software vendors, all the software vendors in our benchmark, Microsoft, SAP, Oracle, they're all moving out of the services space when it comes to business intelligence and analytics. That's not to say they're abandoning analytics, it's that they're focused on the software side and not the services part. The hardware-specific vendors are relying on their partners. The Indian-centric firms, the Indian-centric companies, in terms of analytics, they have been growing, but they're certainly at a disadvantage to the last group, which is the consulting and systems integration companies. Accenture is one that comes to mind. Deloitte would be another one in that group. They've been growing the fastest, and that's because consulting really is the first key step. And Elitsa mentioned this earlier when she talked about management consulting. Ramunas mentioned it as well. Consulting, we expect to see a spike in consulting revenues in this year, going into next year. Strategy and operations consulting will be leading that way, and we're seeing that across business intelligence and analytics as well. We looked at it not only from the vendor side, but in this particular space, we also looked at the clients, and we did a study on how clients who buy business intelligence and analytics services look at the market, what they're looking for, what their priorities are, how their spending is going. And what came across and throughout all the research was that business intelligence and analytics clients want a trusted name. They want someone they've worked with in the past. They actually value speed to getting a return on their investment over the particular price. So they're willing to pay more, and they're willing to pay more to someone they already know if they believe they're going to get that value quickly. And then the last part is that they expect industry expertise, and they expect that the technology that will be brought to the table will be absolutely best in class and the top capabilities. And again, that plays right to the strengths of the consulting and system integrations competitors or vendors, because those folks have that industry expertise already baked in. That's how they're aligned. That's how they're arranged. And they also have the ability to partner across, as Ramunas mentioned, they have alliances across all the different software vendors. So they're able to bring that top best-in-class technology capability to the table. So I wanted to highlight not only analytics here, but really analytics in terms as well of how analytics is playing across BI more broadly, across the IT services space more broadly. And now I'll turn it over to Elitsa, and we're gonna look at two particular vendors in the IT services space. Again, as I mentioned at the top, it's kind of a case study and a way of illuminating a lot of the trends that we're seeing across the board here. Elitsa?
Thank you, Patrick. So in this active vendor section, we've chosen Capgemini and TCS, two IT services vendors that are nearly equivalent in terms of annual revenue size. Both have accelerated their revenue growth and are building scale to capture opportunities. So I will start with Capgemini. Of the 30 vendors that we cover in the IT services benchmark, only 3 vendors were able to shift from a revenue decline in 3Q13 to a positive revenue growth in 3Q14. And Capgemini is one of them. And the company also ranks among the top 10 vendors in terms of TTM revenue size. So it's a relatively large vendor. A core strength that drives Capgemini's ability to accelerate growth in 3Q14 is, I think, its European heritage and reach in the region. This, combined with global service delivery capabilities and a well-established onshore, nearshore, offshore presence, allows the company to attract clients in Europe, but not only. As you know, North America is also a region where Capgemini sees success and has client references. So supporting growth from different geographies. Also, over the past several quarters, Capgemini reevaluated its core service areas. And by core service areas, I mean applications outsourcing, ITO, and BPO, and examined the way those offerings are delivered to create an industrialized delivery model, which, combined with the low-cost leverage that it has, offshore resources that it has, allows the company to generate pricing flexibility and is able to successfully compete for deals with India-centric vendors, with other European vendors, and with multinational IT service providers. Initiatives that I think will help Capgemini support growth going forward are its ability to partner, to use partners to innovate its core offerings and develop new solutions. So one example in the core offerings area is the partnership with NetSuite in 3Q14 to provide Virtual Company, which is a scalable cloud-based BPO platform solution, and effectively helps Capgemini expand in the business process as a service segment, an area which we see several vendors moving in and provides opportunities for growth. Capgemini also bridges technology with business needs and addresses industry-specific challenges. So the company has developed and continues to develop its SMAC offerings portfolio, cloud, analytics, all those areas are of particular focus for expansion. It also launches industry-specific solutions, and one example of a recent offering is the Digital Industrial Asset Lifecycle Management for the utility sector. So initiatives like this, development of IP-rich solutions, investment in the digital transformation and digital marketing space will help Capgemini grow going forward. In terms of opportunities, I think Capgemini has shown that it's strong in capturing outsourcing opportunities in Europe, and this can continue into 2015. The company will approach outsourcing opportunities through its updated portfolio, industrialized delivery, and combination with low-cost leverage. One example is the fact that in 3Q14, the company was able to increase its offshore leverage in countries like the Nordics, Benelux, and Germany due to outsourcing activity. So it indicates that those three geographies are active in the outsourcing arena and the use of global service delivery model. Acquisitions will also help Capgemini expand its portfolio and expand its client reach. A recent example in 2014, Capgemini acquired Uriware in France and Strategic Systems and Products in the US. Those two acquisitions position the company to grow in the energy and utility sector, an area in which the company already has planned references and capabilities, but there are further more opportunities through development of industry-specific capabilities. And I expect similar transactions, especially in Europe, where Capgemini is well recognized, has the position and the brand to support the company's growth. I will turn it over to Amy now to cover the second company, TCS.
Thank you, Elitsa. So TCS has steadily outperformed most of the IT services market without having to sacrifice their margins. We do believe they'll continue to see double-digit growth in the next 24 months, but it will markedly decelerate. Increasing competition will definitely pressure their rate of expansion, particularly in the life sciences and healthcare segment. More so healthcare, which many companies have identified as a key market. So the competition is even greater in that area. For example, Cognizant's purchase of healthcare IT vendor TriZetto, which Ramunas mentioned, that will place a lot of pressure on TCS's margins in that segment. When it comes to strengths, TCS differentiates from India-centric peers by acting very quickly as client demands change. They're just very good at adapting. It's not necessarily that TCS is quick to innovate, but they're very good at recognizing who the leaders are in the emerging areas and forming partnerships with them to shore up their portfolio capabilities and workforce skills. One example is the recent expansion of a partnership with VMware, where TCS is opening centers of excellence and data centers, and the two companies will jointly develop solutions for Oracle, SAP, and enterprise analytics. Another way TCS is adapting is to expand its portfolio through intellectual property and next-generation technology investments. If you look at the India-centric vendors, TCS capitalizes on IP and embedded analytics investments, whereas Cognizant builds out business consulting and transformation solutions. Embedding analytics throughout its portfolio and hiring industry-focused laterals helps TCS to increase the value of its offerings, and it helps it to climb the IT services value chain. When looking at initiatives for TCS, they're working really hard to capitalize on digital, which we know is a very crowded space. So TCS has been promoting its digital imagination, or digital five forces concept, as part of an ongoing campaign to describe its go-to-market strategy and articulate its value proposition, specifically around mobility, big data, analytics, social media, cloud, and also artificial intelligence. Right now, TCS lacks widespread brand identity in digital, especially compared to larger companies like IBM, which is investing $100 million to grow its data, digital, and consulting design practice. We do believe TCS's holistic approach to helping clients through the digital adoption process helps the company win small engagements that will ultimately lead to increasingly complex, higher margin projects throughout the various phases of adoption. I think the biggest takeaway from TCS is that they've been working hard to change their reputation from a low-cost outsourcing company to a higher value outcomes-based company. It's trying to compete with vendors like Accenture and IBM through all the things that we just talked about and that you've heard about throughout this presentation. But TCS lacks consulting and advisory capabilities compared to those big multinational companies that they want to compete with. We're also seeing a lot of pure play startups doing well in specific domains too. So we'll see how TCS reacts, but that's the general overview of where they sit right now.
Yeah, that's good, and that's one of the things that I think comes out in this benchmark and then in the business quarterly reports that we do is that you're able to see the differences between some of these Indian firms, which sometimes on the surface they all look like they're doing the same thing. They're all trying to partner, they're all trying to build a digital practice. But when you dig a little deeper, you can start to see that there are differences, and not everybody can be IBM, not everybody is trying to be IBM, but seeing how the different companies are taking an approach to mimic the market leaders, I think is critical.
So what we've covered really is kind of the deep dive into two vendors that definitely have some differences, yet some things are very similar. Both are working with partnerships, leveraging those partnerships, trying to drive them forward. But each has its own strength and weakness. Capgemini certainly is much stronger on the consulting side of the equation. They are European-centric, so they're getting a lot of traction in Europe. But even TCS is seeing some traction in Europe, but they're doing it through really trying to quickly adapt to the changing marketplace, recognizing that the European market is pent up and there's a lot of pent-up demand for outsourcing type work. They've moved people into the area, they put onshore people in place. They're trying to drive the market from that perspective. Just within that one geography, two slightly different approaches to try to grow their business, and these two firms are succeeding. What we're going to see really in the upcoming quarter and in our next benchmark is really kind of taking the themes that we've started seeing from the industry leaders this quarter and expanding on them. We know the healthcare market is not going away soon. In fact, it's going to become more and more competitive. Certainly there's a lot of initiatives in play, and our own HITS benchmark, which we focus on the healthcare market, certainly suggests that everybody in the IT services space is in some way, shape, or form trying to find a niche in the healthcare market space. We've mentioned digital a couple of times. The two firms we talked about, both TCS and Capgemini, simply have a desire to get much larger in the digital space. There are a number of vendors that are making digital announcements or have and over the past several quarters, certainly Accenture, Deloitte, even McKinsey, one of our strategy firms in our management consulting is definitely pushing into the digital space. We're actually in the process and now are starting to publish a digital benchmark, but we're going to be integrating so much of the digital thought we have across our IT services vendors as well in the next edition of our benchmark, just to see where the fingers lie and who's going to be in what niche in the marketplace. And finally, and we've mentioned this in the past, platform capabilities. I've mentioned it probably in the past too. We believe that there are definitely going to be platform wars coming down the pipe. Firms are going to be trying to establish platforms that integrate and provide all their solutions. And you turn to a platform and you get everything. We know that platform as a service is a growing area. Certainly, everybody wants to be the one that the platform that you work on. Microsoft, with their operating system, created a platform years ago that still prevails today, although there's been little dents in it and pushes and little challenges, as it has not evolved as quickly as Microsoft would have liked. But again, we're looking at platform wars across the storage space, across the data center space, and across the application space. So it's kind of coming down the tube, and we're going to be looking at that in more depth in our next benchmark. So with that, I'm going to open up the questions.
And I'll take the first question because it came in the chat function, and that is, where is it? What percentage of the revenue is related to public sector spending? So within the IT services benchmark, we do not break down the metrics, we do not break down the revenue globally or geographically into the different vertical splits. So in a sense, the answer is we don't know, except we do, because we also have a public sector IT services benchmark, which covers 20 companies and includes Lockheed Martin, it includes Booz Allen Hamilton, it includes L3, it includes Raytheon, companies that you think of as being major players in the public sector space. In addition, we have, as Ramunas mentioned, the healthcare IT services benchmark, and we have, as Elitsa mentioned, I think, our management consulting benchmark. And the management consulting one is a little bit unique because we do actually break out the different verticals there. I believe there are 8 of them that we break out within management consulting. And then we have, as Ramunas mentioned, a digital marketing services benchmark. We have what's called a global delivery benchmark that focuses on automation and headcount across global delivery. It's 15 firms. Am I going to get that right this time? 14. I was so close. 14 companies, vendors are covered in global delivery. And then when I was speaking about analytics, I made reference to the research we've done for our business intelligence and analytics benchmark. So the short answer is that for IT services broadly, we don't break it out by vertical, but we actually cover public sector through a separate benchmark, and then we also cover healthcare IT services and then the other cuts that I just mentioned. So that is the question came in on chat. Allison, do we have other questions out there as well?
Sorry, I was on mute. Yeah, we have a couple that came through. The first one we have in queue is, what do you foresee in 2015 regarding trends in mergers and acquisitions?
So
we're looking at each other. Who's going to take it? I'll let Ramunas go first.
I think it's much more of the same. One of the things that definitely is a consequence of what's happening within the cloud market is that as you're moving from traditional hardware and software sales into subscription-based environments, and some of that actually is spilling over into the IT services side of the equation, because we're actually hearing that some of the IT services firms are actually embedding some of the consulting work and selling it as part of the subscription rather than billing it as a separate entity. Scale is going to become critical. You're going to need many more clients to fill the pipeline and get you back to the same revenue positions that you were in the past, where you got these huge hits and then all you had to do is renew them and renew them. So it's definitely a need to continue to build scale. The largest firms are going to continue to get larger. Smaller firms are going to continue to get swallowed up, or the smaller firms are going to merge with each other. There are going to be challenges from that standpoint, especially from a cultural standpoint for many firms in terms of how they operate, which is one of the big things that continues to impede many of the successful acquisitions. But mergers and acquisitions are going to continue. We don't see it ending anytime soon. Firms still are sitting on a lot of cash in their environments. They have to do something with that money. And one way to go is through an acquisition, which not only many times just gives you additional capabilities and fills a hole in your portfolio, but also can bring clients to your fold, and that also helps from a revenue perspective.
So the other thing I'll add to that is our colleague Sebastian Lagana just published an excellent piece focused on the public sector space on whether it was a merger or an acquisition now, I can't remember, but it was Harris, and then they acquired Exility or something. I can't remember the exact name. Very cool name. But anyway, that what he laid out in his piece, and it's published, you can find it on our website, is how that acquisition sort of took two companies that were in the middle to the lower end of the second tier of public sector IT services companies and really brought them all the way up to the very top end of that second tier. Now, you might say, well, so what? They're still not in the top 20. They're still not one of the biggest companies. But I think to Ramunas' point, we're going to start seeing that happening more and more in the IT services space more broadly. And while it's not going to be a threat to, the biggest players like IBM and Accenture and CSC, it is going to start to matter to those that are at the smaller end of the revenue scale because, as Ramunas said, it's all going to come down to scale. If you don't have that scale, if you don't have those end-to-end capabilities, if you don't have the ability to continue to make money even as the per engagement or per transaction or per, I don't know, what's another word for it? Just the for every time that you're paid, if you're not being paid as much for every transaction, you're going to have to do a lot of transactions. So I think the scale issue that Ramunas brought up is going to be critical. And again, I'd encourage people to go find that paper by Sebastian that lays out what's happening in the public sector space around M&A.
Okay. Another question we have in queue. You discussed the difficulties in the U.S. federal healthcare IT space that have impacted the performance of a handful of vendors in your benchmark. What do you see for the U.S. federal healthcare IT market in 2015?
That's a phenomenal question. The healthcare IT services benchmark webinar was last week. I believe it was last week. Was it last week? I think so. And John Costas is the guy who leads our healthcare practice. I'd encourage you to listen to the webinar. Off the top of my head, I could speculate about all kinds of things in that space. I'm not entirely sure that would be valuable. Ramunas can speculate more valuably than I can.
I would rather let John speak to that point. I mean, we know that the federal space is right now somewhat in turmoil. We know that spending is continually going to be under pressure. Budgetary concerns continue to drive out there. We know that many firms have been dipping their fingers into the space, but are having challenges from various perspectives. The whole federal industry and/or the whole spending within the federal space is really a battle of control of who has the dollars. And until it comes to a conclusion amongst the various entities within the federal space of how those dollars are spent, cloud doesn't have a chance. I mean, it's basically you could save so many millions of dollars with community clouds, and basically bridging the various groups of organizations that function within our the federal government. But it's still a battle of control of who's got the dollars, who decides, who makes the decisions about where those dollars are spent, and then who's responsible if those dollars are not spent properly or something happens with the IT infrastructure and or the services that are being prepared. Who's the scapegoat in those kind of situations? So it's a lot of up in the air, and it's going to take a long time for that market to really kick in and start generating the economies of scale that could potentially evolve out of the federal government space.
Yeah, two other thoughts on this the more I sit here and think about it. From my own analytical, skeptical point of view, for the last couple of years, every single one of these IT services vendors has touted their investments and their renewed focus or emphasis or whatever you want to call it on healthcare. And at some point you have to say, well, if everybody is focused on healthcare, then nobody's making money. I think the companies, the Accentures and the Deloittes and the IBMs that made those investments a few years ago are probably the only ones that are really going to continue to do well in that space because they've matured their practices enough to be able to take advantage of everything that Ramunas just laid out. I think you're going to see some big splashy acquisitions like TriZetto, for example. I think you're also going to see, as Ramunas talked about, who controls the dollars, and at the U.S. federal level, and as it all gets played out with the Supreme Court in the states and Obamacare and the whole mess, I think one thing you're going to see, we've already seen it over the last year, and I think it's going to continue to happen, is that a number of these IT services vendors are going to sort of experiment. What works in other places that can then be applied to the U.S. market? We've seen it with Canada in particular, where companies are trying out different approaches or different solutions with the provinces in Canada, both a province and a federal level there, and then bringing that, I hate to call it a best practice, but I don't know what else to call it, back to the U.S. And trying it at the state level and then going up to the federal as well. So I think that kind of thing is going to happen as well, all of which makes the whole picture really even far more messy, and all the more reason to call up John and ask him for his opinion on it.
Okay. We've got a couple more questions that are in queue. We're not going to be able to get to them all, but I wouldn't be a very good marketing person if I didn't pick up the one cloud question that came through, since that's what everybody cares about. So the question we had on cloud is, what is the impact of cloud on IT services? Which service line is the most impacted from the adoption of cloud?
Well, I think, from an IT services perspective, we already seen that in the numbers. IT outsourcing has been most impacted. Outsourcing per se, is changing. Managing cloud environments is going to continue, but the amount of money that people are willing to spend on that, because they don't have the infrastructure in place and they're not actually having their own infrastructure that's being managed, but they are just basically managing an environment, is where some of the challenges arise. The whole IT outsourcing arena is an area where there's going to continue to be managed services. In fact, that within the cloud space is growing pretty dramatically. It's just a question of how does it all transfer over? Where are you losing the revenue streams? Where are you gaining the revenue streams? Firms, especially the hardware-centric firms, are seeing a huge hit from their perspective on the hardware that's being sold and then getting managed. People are shifting their environments to the various, provided cloud infrastructures. Rackspace is a prime example. You don't buy the infrastructure, you basically are renting it. It's not being managed by one of the IT vendors, it's being managed by Rackspace. So you have the service providers many times managing their own infrastructures that are then being provided to the clients. So there is where you're getting your hits on the IT outsourcing side of the equation. So that's where the hit is being taken right now, and we believe it's going to continue for quite a while. Eventually, is going to be an equilibrium and a balance where the revenues are going to finally start to kick in. The annuity streams that are being developed through the various subscription services are going to start billing in, and/or the scale is there to maintain a constant revenue stream. Are all the vendors on our chart here going to be around when that occurs? That's probably the big question in mind. All of them that are listening today and are on our chart are saying, yeah, we're going to be around, but we certainly know that some are going to fall off the chart. The bigger ones are going to continue to be bigger, but we don't know. One of the biggest ones on the chart here, HP Services, really has an IT support and maintenance service embedded in that chart, as well as a professional services component. It's going to be two companies. It's actually going to become two smaller bubbles on our chart here eventually. And will one of them disappear off the chart? We don't know. So, we mentioned already that, for instance, the Xerox bubble got smaller on the IT outsourcing side. Atos is going to become bigger. So there's going to be change occurring. And again, scale is going to be the key driver here. So I think with that,
we'll take another question.
Oh, yeah, we've got time for one more question, Allison?
Yeah, sure. We've got actually a couple that seem to be interesting. So for those of you who can hang on a couple more minutes, we're going to try to answer as many as we can. The next question we had come through, guys, is what key changes do you see from an IT services delivery perspective?
I can take this question. This is Elitsa. So from a delivery perspective, there are several trends that come to my mind. One is the change in the delivery model. So investments in automation, factory-based approach, industrialization, vendors call it different ways, platform-based solutions. There's a clear push across the majority of the vendors that we cover in the benchmark to expand, because they realize that low-cost leverage is not enough to generate, to have pricing flexibility and to generate profit. They add on top of that additional new models, like the ones I mentioned, to improve their delivery model. So combination of automation and the low-cost leverage on the human side factor is one approach. Expanding onshore is another change in the delivery. So India-centric vendors building their consulting and onshore resources across core geographies, Europe, US. So to be able to be near to the clients, to have client face time, and to provide higher value to their clients. IBM, another example in Europe, opening onshore centers to be able to drive the consulting-led value proposition and better support clients within the geographies and combine with the global delivery capabilities that are across the world. Shorten delivery times for solutions. Clients want quick return on their investments. Vendors are pushed to have shorter delivery. And the last item on my list, training of staff for partner offerings. So we have a lot of vendors that are partnering to jointly develop solutions with software vendors and technology service providers, but IT service vendors need the expertise to be able to support such technologies. So we have vendors dedicating a lot of effort and time on training resources to expand the partnerships and to be able to deliver such solutions jointly with their partners.
Okay, thanks, Lisa. So we're definitely running over. So I think in being cognizant of everybody's time, I'm going to wrap up things now. So I know that there's a couple of questions that are out there. What I'm going to do is have the analysts follow up with those folks individually offline. And so with that, I'm going to sort of wrap up the conversation. As I promised, we're going to share all the social media links with you here. So the email address for the analysts, the Twitter handles for all of the analysts and TBR, our links to SlideShare, YouTube. We have a general TBR company page on LinkedIn. One of the things that's not listed, and I always like to give the analysts some props. If you would like, I do encourage everyone, if you want to reach out to the analysts and connect with them on LinkedIn, they're posting a lot of information, either the reports that they're writing, infographics they're working on, are posted to their LinkedIn profiles. So please do encourage you to reach out to them on LinkedIn. As you're leaving the webinar, there is a quick survey. I know many of you who've been on the phone before have heard me say this before. 3 questions: how valuable was the presentation, how good were the presenters, and if there's any other open-ended feedback. We do really want to hear from you guys about what's valuable to you. We realize that your time is precious, and we want to make sure that you're getting the most out of these webinars. So I do encourage you to fill out that survey and tell us what you want to hear from us quarter to quarter. Additionally, keep out an eye out for some of the additional webinars we're doing the rest of the quarter, and you'll probably be seeing sometime in March the next webinar schedule. So we'll be doing IT services again next quarter, as well as some other stuff that may be of interest to you. So with that, I'm going to thank everyone for your time today. And again, if you have any questions, please reach out to any one of us listed here. And if we don't see you now, we will talk to you again all next quarter. So have a great day, everyone, and we look forward to seeing you next quarter on. Thanks.